So what happens when a single piece of news takes a totally obscure biotech stock and suddenly makes it the most talked about name on the market? Today, we're going to deconstruct one of the wildest single-day stock moves you will probably ever see, just to understand all the forces at play when fundamentals, hype, and technicals all crash into each other. Look at this, 1,265%. And no, that is not a typo. That's not a 10-year return on some blue chip stock. That's what happened to one single stock in just a couple of trading days. I mean, how is that even possible? And maybe more importantly, what does it tell us about the market we're in right now? Okay, let's dive into this. The company is Spruce Biosciences, ticker SPRB. On October 3rd, it was just a quiet, sleepy, low-volume stock, closing at just under $9. And then, bam, the spark, promising results from a really key clinical trial. Just 3 days later, it closes at over $130. The fuse was lit, and the rocket just took off. To figure out how a move this massive even happens, you've really got to start with the crime scene. And in the market, the very first clues are always found in the price and the volume. I mean, just look at the sheer scale of this. On a normal day, the average trading volume for SPRB was typically somewhere below 100,000 shares. On surge day, it was nearly 25 million. You know, this isn't just a little ripple of interest. This is a full-blown tsunami of explosive buying. This is our first huge clue. And clue number 2 is the volatility. It's just wild. The stock didn't just go up in a nice, neat, straight line. Oh no, in a single day, it swung between a low of around $6 and a high of $170. That kind of massive range tells you there's extreme uncertainty and just frantic speculation happening from all sides. So, we've got the basic clues. A huge price jump, unprecedented volume, and it was all kicked off by company news. But to understand what's happening inside this move, to really see what's going on under the hood, we need to open up the analyst's toolkit. So our first tool is the RSI, the Relative Strength Index. Now, the easiest way to think about this is like the tachometer in your car. It just measures how fast the price is moving. Anything over 70 and you're in the red zone, it's considered overbought. So where was SPRB's RSI? A jaw-dropping 94.93. It's not just in the red zone. It has gone way past the red line. This is the technical analysis version of a rubber band that's been stretched to its absolute breaking point. It's a massive warning sign that things are way overextended. Okay, next up, we've got the MACD. Now, if the RSI tells us the speed of the move, the MACD tells us about its strength. Is this a powerful, sustainable surge, or is it just some kind of flash in the pan? And this is where we see the central conflict, the big paradox. SPRB's MACD is strongly positive. This tells us that even though the stock is wildly overbought, the momentum behind it is like a freight train at full speed. There's incredible power pushing it forward. And our final piece of forensic evidence here comes from the Bollinger Bands. Now, you can think of these like channels or guardrails for a stock's normal price range, and SPRB is trading miles above its upper band. This just screams extreme volatility and confirms that we are deep in uncharted territory. So here's the crucial point. What happens when you put all these different clues together? Well, you have indicators that are screaming danger, too far, too fast, right next to other indicators that are shouting full speed ahead. So let's just look at the scorecard here. The RSI is at an extreme level, telling us the stock is totally overstretched. The Bollinger Bands are confirming that extreme volatility. But then you have the MACD showing this incredibly powerful bullish momentum. The signals are completely conflicting, which paints this perfect picture of a high-risk tug-of-war between the bulls and the bears. So with such a dramatic conflict in the data, analysts don't see one clear path forward. No way. Instead, what they see are several very different, very high-stakes possibilities. The only thing that's pretty much guaranteed is more volatility. So, what could happen next? Well, analysts are looking at 3 main paths. First, the stock could just keep up these wild swings as this battle for control rages on. Second scenario, a sharp correction. Those overbought conditions finally win, that rubber band snaps, and the price could fall hard, maybe down toward that $50 to $80 range. Or third, the breakout. That freight train of momentum just keeps going, smashes right through the recent high of 170, and triggers a whole new wave of buying. So after digging through all the data, looking at all the evidence, what does this all mean? What's the final conclusion from this absolutely incredible event? Well, the technical analysis report that we reviewed really distills it down to this one sentence. The extreme volatility and lack of clear support levels near the current price make this a high-risk situation. And the keywords there are, without a doubt, high risk. This isn't a prediction, it's a giant caution flag. And this really brings us to the ultimate question that absolutely everyone watching this stock is asking. Is this a rocket ship that's just getting started on its journey to new highs, or is it a spectacular bubble that is just about to pop? The data suggests both are actually possible. You know, when you take a step back, this event is really a perfect case study of our modern market. It shows how a real fundamental catalyst, actual news, can get amplified by speculative frenzy. And what that creates is this classic battle between powerful momentum and extremely overbought conditions. It is the very definition of a high-risk, speculative situation. And honestly, a powerful reminder that in today's market, even the wildest rides demand extreme caution.